here. But Jay Kale, who's the Senior Vice President Research at Elara Capital, joins us now to tell us what to expect. Jay, we just laid the foundation of what the sector could do this quarter, but you tell us which are the companies that could do well, which are the companies that could move to the back burner this time?
Yeah, good morning, Sonia. So, in Q2 FY24, of course, this is one of the quarters where, all the stars are aligning, so to say, that, you've got favorable raw material prices, you've got good volume growth, in anticipation of the festive season. The, volume ramp up has been pretty good in Q2. And at the same time, for various companies, the mix has also been more on the premiumization side. So the premiumization trend has continued as we move up towards the festive season. So, and also, normally the festive discounts that come in, this time festive being in Q3, those will be booked in Q3 and not in Q2. So Q2 is, probably one of the better quarters, where we will have a benefit of volumes as well as margins. And, like you mentioned, Maruti specifically seems to have a pretty good QOQ margin expansion led by premiumization and volume growth. And then, of course, two-wheelers, again, there will be some of them which will have a favorable mix, adverse mix. But I think Bajaj Auto within that seems to be pretty well placed. Same with Hero MotoCorp and TVS. I'm sure there is some bit of impact of adverse mix. So I think all in all, a pretty good quarter. And I think all eyes will now be on the festive season, because how Q3 and Q4 volumes shape up will be a function of how the festive season pans out.
All right. I wanted your thoughts also on what's happening in the tyre space, because that news is immediate, right? I mean, you've had a very good performance from CEAT, and now all the other tyre stocks are running up. But how are the valuations looking for the sector now? Which is the stock that has more valuation upside?
I think, tyres, last few quarters, they have continued to surprise on the margin side. I think Q2 also, with CEAT reporting a QOQ margin expansion. Given that it has also come by gross margin expansion, one would have a positive read-through for Apollo and MRF as well. And that's why we're seeing most of the tyre stocks on the upward trend. But, one has to be careful in terms of how the margin trajectory moves. Tyre sector has been very volatile in terms of margins. With recent increase in crude and, natural rubber prices, you could see some softening of margins in Q3 and Q4. But for the moment, I think the going is quite good for the tyre space.
Okay, the going is good for the tyre space. Where else are you seeing traction? Now, two-wheelers is interesting, right? Because the volumes year on year have still fallen, but the managements are very hopeful that exports are picking up in a big way. And towards the fag end of the quarter, you've seen an improvement. And on a valuation parameter, something like a Hero MotoCorp is still cheaply valued compared to its peers. Would that be your stock of choice, or do you like any others in the two-wheeler space?
In the two-wheeler space, we are positive on Bajaj, TVS and Hero, and we have a negative bias towards Eicher. That's how we position our view on the two-wheeler space. Again, festive season is extremely important for the two-wheeler space, given that the 32-day festive season probably retails close to 2 months of a normal month retail. So that's the weightage of this festive season. And based on that, you will see how 2H volumes pan out. But on the export side, I think we are seeing at least the bottoming out. And now the low base has kicked in, and hence players like Bajaj and TVS will favor well. Whereas for Hero, I think it is mainly on the festive. All hopes are hinged on the festive season.
Okay. And in the commercial vehicle space, what's the expectation this time between Ashok Leyland and Tata Motors? Of course, Ashok Leyland is the more expensive stock. But what are you looking at in terms of numbers, and are these valuations justified?
I think commercial vehicles, and especially M&HCV, if you see our expectation for FY24 in terms of growth rate is 10%. Now, to get that, you will see Q3 expectation is a strong double-digit growth. Whereas Q4 will be muted given the last year's high base, as well as, a pre-election. There is some bit of softening in terms of the fund flow that happens in this space. So I think, full year growth, I think 10% growth still remains intact. Tata Motors, frankly, is not, like you mentioned earlier, also is not really a pure play commercial vehicle. A lot depends on how JLR pans out as well. But on Ashok Leyland specifically, I think what has been encouraging is that the discounts have been fairly under check. Of course, they have increased from a quarter-on-quarter basis and all, but as a trend, if I have to see, they have been under check. So that should bode well for margins for Ashok Leyland as well, as what the case is for the entire auto space.
Okay, all right. Just one final question, because tomorrow you have Bajaj Auto's numbers. You mentioned it briefly, but the stock has already rallied 40% this year. Numbers are expected to be decent this time. What are your own expectations, and what are the things that one needs to watch out for? And do you see a further upside in the stock?
Yes, I think, the key things to watch out would be the commentary on the festive season and the commentary in the export markets. I think these two are the main drivers. And of course, their ramp up on the Triumph side. But one good thing is that the mix of Bajaj Auto continues to improve, and we've historically seen that their delivery on margins have been pretty good. They have been consistent in terms of margin performance, lesser volatile than many other players. But I think the key thing to be watch out for is the domestic festive season and the exports commentary, as well as the three-wheeler. I think they have been doing pretty well in the last 1 or 2 months specifically. So we have a buy rating on Bajaj Auto, and we have a target price closer to 6,000.
Okay, all right, Jay. Thanks so much for stopping by and filling us in with your take on all of those auto stocks. We look forward to those numbers. By the way, the